Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. To my left is Karthik Malhotra and Krishna Kumar. Also joining us on the show is market expert Kush Bora. I want to first begin with markets, Karthik. Markets opening in the red, down by as much as 200 points this morning. Sensex and Nifty down by approximately 160 points.
Absolutely, Shweta. Yeah, so markets have opened in the red and not a very rosy picture to paint early in the morning, especially after a slightly longish extended weekend, if I may, at least for me, because I wasn't here on Monday. But after
many weren't there in office on Monday, Karthik. Many people were not there, but look at those.
This is what the market is looking like. Nifty 50 in the red, Sensex in the red, Nifty Bank also down. IT is picking up a little bit. I think IT comes on the back of Infosys, in the green this morning on the back of the deal it has struck with Liberty Global. And that has lifted the Nifty IT stock. Let's look at the stocks in action, and I think that will bring these numbers in perspective a little. So if you look at the stocks in action this morning, and this is as of 9:45 a.m., you've got, of course, news triggers on Infosys, which has taken the stock up. It's trading at about 1410 levels, about 15-20 minutes ago. This was the number. Apart from that, ITC continues to be in the green. Everything else, from Adani to Indigo, Mahindra, Reliance, HDFC Bank, pulling down the markets this morning. Not a great start for a Wednesday morning.
Not a great start. Kush, explain this to us. What's happening here? Put this in perspective. Is it the global domestic cues, inflation up, or is it what's happening and the domestic cues, of course, not in line with what was expected. Inflation at about 7.44% CPI in the month of July, way above the expectations. Is that what's pulling the markets down, or are there more global cues?
Hi, very good morning, guys. First up, let me just give you some hope and then dash it. Nifty is actually rebounded from 19,300 level. Now, if you see the Monday move, 19,250, where the 50 DMA lies, Nifty actually rebounded from that level. Now, while it might sound very rosy that we are up from the day's low, I still wouldn't rule out further downside on the Nifty. And if we break the 19,250 level, which is the 50-day moving average, I'm actually looking at 18,800, where any kind of major support lies for the market. You're right. The culmination of whatever is happening globally, plus the macro data that came in that wasn't as encouraging, is actually in just one figure, which is the FII selling. Now, if you see for the last month or so, they've been sellers on a continuous basis. That is actually not auguring well for the markets. So as long as that pressure remains, I don't see a very stark upside coming into the markets. However, for a stock picker, this is a good time. If you're an investor from a medium term perspective also, this might turn out to be a buying opportunity, let's say 3, probably 6 months from now.
All right, let's quickly also touch upon stocks that are in focus. Let's quickly bring back that graphics on screen. Infosys, to begin with, as my colleague was pointing out, is going to be a stock in focus, Karthik, because of the deal that it's signed with Liberty. What does it really mean for Infosys?
It means a couple of things, Shweta. Number one, this is, I think, the first foray for Infosys when it comes to deployment of its AI tool. Now, this AI tool, of course, as we know, was launched about 10 days ago. It was announced when the results came out. And this tool now gets deployed for customer behavior, for customer analytics, for Liberty Global. Now, Liberty Global is an entertainment company. From what I understood from the news, it is trying to build a stack. It is trying to build and operate model for Infosys, whereas Infosys is going to build the platform for Liberty Global to acquire new customers, to take its entertainment offering to customers in a new format. Maybe not very different from what we do at News 9 Plus. It could be an OTT stack being built. And in addition to that, the AI tool gets deployed now to understand consumer behavior, to retarget customers. And this comes, of course, as a $1.5 billion deal. Now, for Infosys, this isn't the first big deal it has struck. There was a $1.9 billion deal that Infosys had struck with a British telecom player also recently. And overall, I think the message for the IT sector there is that discretionary spending from the West is beginning to loosen up a little. This was not a trend that we had seen in all of last year and about the last 18 months or so. IT spends from Western companies wanting Indian IT companies to build software for them had depleted significantly. And this was in the wake of US inflation. This was in the wake of the banking crisis in the US. So overall, the message now being that if not US, at least UK seems to be a prominent place for companies to start sending some contractual work back to Indian companies.
And Nifty pack, in fact, outperforming many of its peers and other indices. Kush, what's happening here with IT pack especially? You know, as I said, it's outperforming banking, it's outperforming, you know, consumption stocks. What's your view on IT pack?
I'm glad you bring this sector up because my view's been very constructive on this entire pack even before the results came in. Even in our advisory we've mentioned that even after results, if you see a dip in the stock or all most of the stocks rather, it just might turn out to be a buying opportunity, and we are seeing precisely that play out in most of the sectors. Infosys, a case in point where the low for the stock was made on the day of the results, somewhere close to about 1185 odd levels, and from there the stock's actually rebounding, gaining from strength to strength. It's on the verge of crossing over its near term resistance zones, which is about 1430 odd levels. Once that happens, I won't be surprised to see 1600 kind of levels on Infosys. Now, one interesting theme that is playing out here is that we've always followed the Nasdaq. If the Nasdaq's down, you'll see the tech pack not performing so well. In fact, just we practically replicate Nasdaq day by day. But if you see the last week or so, where Nasdaq's actually topped out, largely given the lack of enthusiasm in the chip making stocks and other big tech stocks, Nasdaq's actually going down while the Indian IT stocks are actually going up. We've always maintained, that the kind of businesses that, the Nasdaq sort of encompasses and the Indian IT stocks have are very different. There is no rhyme or reason to link them except for the fact that they fall under the broader gamut of, IT stocks. So for me, IT stocks from here remain a buy. We are very optimistic on a few names, Infosys being one of them, HCL Tech, being the other one from the large cap space. From the mid cap space, we like, Persistent. So these are some of the stocks that are, on our radar, any kind of dip, and, we turn buyers on, these stocks.
All right, so IT remains on the radar. Another story that's on the radar is that of Interglobe Aviation, the parent company for Indigo. Gangwals, the family, the promoters are selling their stake.
The promoters, in fact, at Indigo, at Interglobe Aviation, held as much as about 57% of the company, and this for the largest airline operating in India right now. There are technically just two, but yeah, even if you were to spread that to, let's say, a SpiceJet or a, Avasa, what is that? Akasa. It still extends to about 4 players, but Interglobe Aviation being the largest airline and the largest stakeholders still being the families of the promoters. So 57% was held by the promoters and about 29% actually was held by the Gangwal family, is still held by the Gangwal family, which we are now told are in talks to sell about 3,700 crore rupees worth of shares, diluting their stakeholding in the company. Perhaps on a bid of, of course, the airline is at the peak right now, so there is great valuation that can be derived by selling your stake. Secondly, I think more professional retail level shareholding is something that could help the airline, continue its operations unabated. But interesting story there, because the stock markets do not seem to have taken that news of Gangwal's, diluting their stake very well, and the stock this morning was down almost 1% or so. Right. So let's understand from Kush, what is the horizon on Interglobe Aviation? Where does it go from here?
The outlook's not so bad, and I'll give you a couple of reasons. Let me play the devil's advocate. The aviation sector is globally, historically not known to be a money-making machine for investors, right? I mean, if you take a handful of names globally, Southwest and Etihad, some of these which are actually state-owned, there haven't been too many cases where the entire sector has made a lot of money for investors. Now Indigo stands as an exception to that rule. Ever since its IPO, the stock's actually done well. We know the kind of performance that the company has on ground as well, so that just translating into stock performance is not actually that much of a surprise. For me, the kind of news that has come out and the kind of dip that we are seeing, in the grand scheme of things, this will just be a buying opportunity. The stock's been in a bit of a pressure. You know that crude prices have also jumped up if you see in the last a couple of weeks time, supply concerns and other factors included. That's why the stock's in pressure. This news again not doing too much for the stock. But for me, as I said, in the grand scheme of things, this dip will actually be a buying opportunity. I will accumulate the stock from 2400 to 2450 kind of zones. My near-term targets on this are 2600 and 2750, where the stock made a recent high. So yeah, I mean, given the kind of setup and the moves that we've seen over the last few months and years, for me this remains a buy. And these kind of dips are actually quite encouraging if I'm an investor.
All right, and moving away slightly to another stock in action, that is the ITC, reported good numbers as some would say. Kush, what is your overall view on the consumption stocks, including ITC? ITC not in line with many other FMCG players and their revenues for that matter.
Yeah, but I think the major impact that the stocks seeing is due to the demerger story, right? I'm sure the investors will take the numbers in their stride, but it's the demerger story that's actually not playing out too well. That's something that's the bone of contention in the entire ITC story at the moment. Now that said, I will still stick my neck out
Kush,
and say that ITC.
If I may ask you to elaborate on that, you are saying the demerger story is not playing very well, and we can see that. In the equity market, we can see the performance of ITC stock took a beating immediately after that demerger story came to light. Explain to us why. What exactly are investors fearing?
I think the idea was that the ratio will probably be a little more favorable. The valuation for the hotel industry, the hotel business will probably be a little more favorable. That's not something that's come in line with the expectations. Now that said, if you see the stocks fallen sharply from there, for me what's happened is that this dip is actually a buying opportunity. So as I was suggesting, that the entire FMCG space is in a bit of a pressure right now. If you look at the likes of Britannia, if you look at the likes of HUL. These stocks aren't doing well, and with little hope of reviving from here on. So while the dip has come due to more corporate reasons rather than the stock performance itself, for me ITC will stand out as an exception. I will look at buying opportunities. The stock is taking support near its near-term averages, which come around 440 odd zones. And if you see, that's the way that's the level where the stock has rebounded. So I will actually look for buying opportunities in ITC, but not FMCG pack as a whole. For me, the likes of Britannia, HUL will still remain a short trade, while ITC remains a buy on dips, and these are precisely the kind of dips that you look for in a stock when you're looking at an entry point.
All right, Kush, stay with us. I think it's about time we touch on broader market parameters that could be moving markets, and one of which is, as I briefly touched upon, is the inflation figure that came for the month of July at 7.55%, well beyond the RBI's tolerance of 4 to 6%. All of that is going to have a long-term impact. We don't know whether RBI is going to take very kindly to this. Could there be a rate hike in future?
So Shweta, yeah, I think these numbers have come at a time immediately after the RBI decided on the third consecutive pause. Now, this was something that the markets were expecting, and hence we did not see too much selling or too much buying. We saw markets to not really react too favorably or unfavorably to the pause, the sustained pause that the RBI had made, the MPC had made. Now, the problem is inflation data came a little later, which is always the case, and inflation numbers come a month too late because RBI's action is preemptive, inflation data is reactive, post facto. So, inflation numbers have not have come out and are definitely not worthy of celebration at all. Now, of course, given the large, lofty ambitions that India has, not misplaced, but fairly ambitious plans that India has of growing at 7.6% to be the third largest economy by 2030, these numbers definitely come as a dampener. In the immediate term, what you're seeing is that headline inflation, of course, in the range of about 7.6% is well above RBI's threshold, RBI's tolerance even of 6%. RBI has come on record multiple times and said that we don't want to look at a range, we want to come down to the number of 4% clear. Right, now at about 7.6%, we are far away from the target. Now, RBI had also said that it expects the inflation for the quarter of July to September to be range bound again in the 6.2% range or so. Now, these numbers coming in at 7.6% for July pretty much suggest that for the subsequent 2 months of August and September, the numbers will actually, the inflation numbers will actually have to come down to about 5%, 5.4, 5.5% or so. Now, where is this inflation stemming from? This inflation is largely stemming from food inflation, and food inflation has come in year on year for the month of July at 11.5%. And of this overall food inflation basket, you've seen vegetable prices Tomatoes, for example, up about 200%, many other vegetables also up, but vegetable inflation has come in at 37%. This is obviously bad news for overall inflation numbers. It is bad news for the MPC's decision, which they may now be looking at in hindsight and saying that, hey, maybe, you know, a 0.25% hike may have been in order. We don't know. US, for example, has come out and said that multiple rate hikes are going to continue. India is continuing on a pause with a hope that there could be a rate cut early next year, Jan onwards, right? And this is also election year, so I don't know how much independence RBI will be able to execute when it comes to the monetary tightening, to the monetary policy. But yeah, if inflation numbers continue, not at 37% for vegetables, even if it comes down to 20-22%, food inflation comes down to 8-9% for the month of August. The overall retail inflation levels for the quarter are very difficult to sort of, you know, find their way in the threshold of the RBI. So, yeah, I mean, you know, I think we'll have to look at de-link inflation from markets. Market sentiment is one thing, but look at inflation from the perspective of economic growth, from the perspective of the consumption story taking off. And these numbers definitely don't paint a very good picture.
And these numbers, looking at those numbers, ginger prices up 177%. The food inflation is at a level where, if I may, it's not digestible at all. None of those ginger helps you digest. The price of ginger doesn't help you digest anything that you eat along with ginger. You know, the only thing I can add to this is Shweta, when the RBI has problems with inflation, it can introduce measures to contain it. But when it's something like food inflation, it's far outside the purview of what RBI can do with its policy to control it. Because food inflation is driven by supply-demand factors and sowing factors and monsoon factors. And all of them are negative for as far as the food inflation is concerned. You've had monsoons destroying certain crops. You've had certain crops like tomatoes which have not been sown enough for the season. So my biggest fear is that the government is now stepping in to bring down tomato prices. It's going to be a while before we see the original tomato prices of 40 rupees per kilo or 50 rupees per kilo. It's going to be a while because not enough tomatoes in the country and the RBI can't do anything about it. Not enough ginger in the country, not enough tur dal in the country. So, you know, all of these factors are outside RBI's purview, and that's what is keeping me highly worried at this stage.
And again, food inflation is something, or food is something which is an essential, you know, I mean, by increasing rates, by crunching liquidity in the market, by sucking out money from consumers, you will actually not be able to tame the demand for essentials.
Absolutely.
And as Krishna said, supply happens to be a constraint. So what does the monetary policy really do to tame down this retail inflation? You know, so core inflation, yeah, RBI can do a lot, but non-core retail level headline inflation, I'm not sure much can be done by the RBI.
All right, let's quickly bring in Kush into this conversation. Kush, if you're still with us, how worried are you about these inflation figures? Core inflation, surprisingly so, still moderate. It's the headline inflation, food inflation particularly, that is giving pangs to not just people but perhaps also the government at this point.
While I agree, you know, with what was just discussed, that, you know, this is absolutely outside the RBI's purview, but I think, you know, we can take heart from the fact that food inflation is typically not so sticky. You know, in the past we've seen, you know, onion prices, you know, move up and then, you know, eventually move down. So my hope is that, you know, in the coming, quarters, you know, if not months, we will see the inflation, you know, cool off, you know, primarily because of the, food prices, you know, rationalizing, if I may say. And then also, this being the election year, we know, you know, there could be a cut in the, crude oil prices also. So there is a very good possibility that, the inflation could probably head south, you know, in the coming days, giving some comfort to, the RBI. But yeah, overall, I'm really, at the moment, not too concerned about, the overall, inflation figure that's not come, you know, as low as expected, or rather, it's quite high compared to the street expectations.
All right, and my understanding, Karthik, is it's only going to get worse. This is data from July. August has not been too great either, especially for vegetable prices. Throughout the month of August, we have tracked prices. They've remained very high.
True.
So when the data comes out, and in fact this is exactly what we've been fearing for a while, when the data comes out, it could be a further dampener. We don't know how RBI is going to look into it, but let's move to global cues. Inflation, not just a worry here in India, but also in China, in Russia. Interest rates at an all-time high in both the countries.
Yeah, strangely, Shweta, you know, it's a very brave world that we live in, because different countries, despite being so interconnected, are facing with very different problems of their own when it comes to inflation, when it comes to interest rates, and when it comes to overall trade. So let's start with Russia, for example. Russia is facing a different problem. Russia is facing a problem of its currency being completely devalued. So the ruble was trading at about 101 rupees, 101 rubles to a dollar, 101. And this, of course, is something that makes trade untenable. Now, this was great news till as long as Russia was able to export oil. If it exports crude, for every dollar worth of crude, there are more rubles flowing back into the economy. But of course, inflation continues to be a worry for Russia as well, and this depleting currency makes its imports that much more expensive. So it decided to, in fact, raise the interest rate by 350 basis points, 3.5% to a level of about 12% right now. So, I mean, shockingly high interest rates. Now, compare this to, let's say, what's happening with China. China is facing a problem of deflation. So, whatever is being produced by the factories, whatever factories are operational in China right now, whatever is getting produced is actually not getting consumed. So, China is fighting a very, very different battle of deflation, wherein consumption needs to actually be given some sort of an injection, some sort of a spurt that consumption takes off again. And it's exactly the same story, not just at a retail level in China, but even at an industrial level, because factories have been shut and due to which youth unemployment is at the highest ever. Almost 22% of the Chinese population between the age of 16 to 24 is unemployed. Now, how does China fight back employment? Because it's all interlinked. It needs people to be employed. For people to be employed, factories need to work, and only when factories are operational, people are employed, that consumption is going to take off. So, to ensure a greater offtake of credit, China is actually cutting down interest rates. Interest rates in China are down to about 1.8%. Not a great cut. It was at about 1.9% last month. It's down to about 1.8%. But the idea being that industry takes this credit from the banks, invests it back into getting its factory cylinders firing again, the manufacturing to pick up, youth get employed, and the consumption cycle takes off. So, very different problems if you look at what is happening in Russia, what is happening in China, and of course, what is happening in India and what is even happening in the US. So, we live in an interconnected world, but this interconnected world has got very different cables and wires running through them.
Same problem, but different approaches to dealing with the problem.
Actually, different problems also. So, we are dealing with inflation in India, and across the border, we are facing a deflation scenario in China. So, very different problems. India wants to constrain liquidity. India wants to restrict money, surplus money in the market by increasing interest rates, whereas China wants to loosen its monetary policy, push more money out into the market for consumption to take off.
And Russia, incidentally, is hiking interest rates for a very different reason. It's not to do with what is
It's
happening.
currency.
It's currency, and that is impacted by the war.
Inflation and currency.
Yeah. So, the only thing that we understand over here? There are three different things happening. India wants to, pause interest rate hikes and impossible. Hike interest rates again because of the way inflation is. So that is a completely different story. It's based on inflation. China is the exact opposite of India, so that's why it's cutting interest rates, keeping it near zero, like what Japan was. Japan continues to be, in fact, with zero interest rate policies. What is happening with Russia is the curious case of Russia. It is only Russia that decides to go in for a war in a post-pandemic world. And it's Russia's currency which has been the worst hit as compared to, I mean, it's not like, the rupee has had tough times, all kinds of tough times.
Come to think of it, almost the same. A rupee to a dollar, a ruble to a dollar, almost.
It wasn't the case when the war began. So look at the kind of tumble that the ruble has taken. So I think people watching interest rates, this is a great way to learn how interest rates are managed in economies and how many different factors really affect interest rates.
Absolutely. And interestingly, the Russian government had to criticize its apex bank to tame the fall in ruble, which is when this emergency meeting was called and interest rates were hiked. So that also shows a lot of entanglement within the different institutions in Russia. But all in all, different problems, different world order, and we continue to take them all one after the other. Thanks very much, Kush. I think Kush is gone. Thanks very much, Kush, for joining with your inputs on that very crucial story. But shifting focus now to a story that we are tracking by the way of online gaming platforms. Online gaming platforms, Karthik, Krishna, have a different woe this time around, and moving away from what has happened by the way of new GST regime, shifting back to what was happening during the earlier GST regime, where both game of skills and game of chance were taxed differently at 18% and 28%, game of chance at 28%, game of skills at 18%. We are given to understand that
not
tax
according
authority.
to the government. The government always said,
No,
hey,
but
it's 28% for all. We are just clarifying, we're not changing the tax
But
stance.
apparently, all of that now means that tax authorities is alleging that there is a tax outgo of approximately 45,000 crores that these companies have to pay back. This is going to be a big dampener for many of these companies.
So, Shweta, a little bit of context here. So, what gaming companies were doing, apparently of their own, free will, if I may, that they continued to pay 18% GST instead of 28% GST, wherein I think the government in its 50th GST Council meeting clarified that this is just a clarification of GST rules. It is not a new rule being introduced or a new tax rate being introduced. So companies up until then continued to pay 18% on GGR instead of face value. Government says face value, yeah, okay, we'll let you have the benefit of doubt. Face value kicks in only on the 1st of November. Until then, 1st of November or 1st of October. 1st of October. So face value rule kicks in on 1st of October, but 28% has always been the case. So if it is 28%, you will pay me 28% retrospectively. Face value comes into effect on 1st of October.
So differential taxation, which was one of the concerns from what I'm reading at the moment, was that many of these companies who were in fact in the game of chance, not in the game of skills, for example, horse racing, casinos, were paying 18% on GGR.
That's right, and which is what the government in its 50th GST Council meeting said that, hey, the rate has always been 28%. We are just clarifying it.
So this is retrospective taxation then?
So is it retrospective, or did the companies not really look at the rule books very clearly?
But then how did GST authority continue to take that money since 2017 when GST was rolled out?
So actually this has been into multiple rounds of litigation already. In fact, Gamecraft, a Bangalore-based gaming company, took this matter to the Karnataka High Court, and Karnataka High Court there had ruled in favor of the gaming company, Gamecraft, saying that yes, 18% on GGR is the rule that needs to be applied. But the government is now saying that nothing doing. The rule has always been 28%, and this is not retrospective tax because we are not changing it from a back date. We are just making sure that your compliance is correct, backdated. So it's not an implementation of a backdated rule. It is clarification of the rule that according to the government has always been in place, and this is not backdated collection of taxes because of our rule change, but this is backdated tax collection because you faltered on paying the correct interest rate.
So you gamed the system basically.
I don't know if it is gaming the system or I think what everybody should agree to is that the fine print also needs to be written in very simple, clear language. It cannot be difficult or almost impossible for not just the gaming companies but even the courts to decipher what the government means by a certain industry, classification of an industry, demarcation of a broader industry into sub-verticals of that industry, and applicable tax rates. So I think the language and the explanation of the rules needs to be absolutely clear, so that when a gaming company or when an investor is taking a punt on an industry or on a sector, it is done with both eyes wide open. And the vision being 6 by 6, it cannot be, hey, this is my understanding of the rule. This is my hope for the rule to stay in existence for X number of years. These policies need to be very clearly articulated and need to be sacrosanct. You cannot have rate changes or clarifications coming years after implementation.
So just to clarify once again, the differential taxation never existed in our understanding. It was always 28%.
In the understanding of the GST Council.
That there was never any differential taxation.
There wasn't any differential taxation.
And so therefore, 18% GST was not the correct GST that many of these gaming companies were paying. How were they allowed to not pay up 28% and pay 18%?
Which is
and
why
that
the litigation,
continued to be accrued.
Which is why the litigation, because the tax authorities had gone after Gamecraft, being one example. I'm sure they must have gone after other companies as well. They had gone after Gamecraft stating very well that the tax rate is 28%. And then when the matter reached the Karnataka High Court, it was ruled in favor of Gamecraft, not in favor of the government.
Which was the understanding of the court.
Of the court, yes.
That 18% GST levy on game of skills stands.
Absolutely.
Right. So therefore, I think all this boils down to perhaps that there was no clarity on whether there was any differential taxation, but the 50th GST Council has now clarified. There never was.
Clarified.
So it was neither a game of skill nor a game of chance, it was a game of
20 game of facts. And so let's
as far as
quickly,
taxing is concerned.
right, let's quickly go through the new rules that will be made applicable 1st of October. 28% GST levy on face value. Remember, not on GGR, on face value for both game of skills and game of chance. As I said, the new GST rate will be applicable from 1st of October, which is just around the corner. There will be no differential taxation between the two games. It comes to an end, and therefore these companies, many of these companies who's not paid up 28% GST levy, only paid up 18%, will have to now pay up a massive 45,000 crore rupees.
On GGR, 28% on GGR, and come 1st of October, boom, here comes the double whammy, pay 28% on face value.
All right. so the differential taxation or the understanding of it has now been clarified by the GST authority. Well, let's shift gears rather to auto sector. I think I'll let go of Karthik here.
Thanks,
Karthik,
Shweta.
thanks very much for joining in. Let's bring in Amit Ranjan into the conversation.
Right.
An interesting story that is playing up in the auto sector, which is the EV, and more EV portfolio, the increasing number of EVs that are now going to be launched. Just this morning, Thar.E was unveiled. What is on offer at this point?
Right. The good thing is that we have Amit joining us as well. Amit, good morning, very good morning for joining us. What is interesting here is that EVs, if you look at it from a small car, the smallest, remember the Mahindra Reva electric that came out? It was this big. Everybody thought that EVs, the entire ecosystem doesn't exist, so the smaller the car, the better. So you need to charge it lesser.
Absolutely.
It's you don't have that many charging stations. So that is where we were going at. But with the kind of breakout growth in EVs that we've seen, bigger and bigger cars, huge cars are coming into that. But Mahindra Thar, which is these cars require a lot of energy to run. Thar, the Bolero, they've launched the Thar, and as they launch the Thar electric, Mahindra has made it clear that all of it's from Scorpio to Bolero, it's big SUVs. The electric versions of the SUVs will be launched going forward. This at a time when even luxury car makers from Mercedes to BMW are launching one electric version after the other. So this is truly a breakout moment as far as electric vehicles in India are concerned. What say, Amit?
Yeah, and they have made it clear in their exhibition that was where this prototype was launched in Cape Town, that this is not going to be just the Thar ICE model that is converted into an EV. They have gone to the drawing board right from scratch. It is remodeled. The design will be different, and I'll give you how serious they are about this. There will be 75 sounds inside the cabin, from the opening of the door to all the car modes, the sports mode and whatever inside the cabin. The spacing will be bigger, the ground clearance will be more, which has been mentioned in the graphics. So it is not that they are just converting something, the same body, and remove the engine and put batteries in the space. It is a new design from scratch, and they have made it a point to state that. It's called the Thar.
It's still called the Thar, but interesting, very innovative, different. But I have to expanding on Krishna's point. We've come very far, Amit, from talking about two-wheelers, EVs, small Revas, to now big SUVs like Thar. Essentially, and a remodeled Thar at that, not the same Thar that not the same Thar that you see on the roads at the moment. So essentially, alluding to the fact that there's not just more demand for EVs, there's also demand for bigger EVs at this point.
There's demand for bigger everything, it seems, right now.
So
if we have time, we will talk about the luxury car segment, what it is going through.
We'll get there, Amit, but the fact of the matter is that, look, I mean, I think what the point we're trying to arrive at is that SUVs are doing really well in the Indian market.
Yes.
Yes, in the regular petrol and diesel variants, you have the mid SUV, mid compact SUV, compact SUV, mini compact SUV, different versions. But the classic SUVs, you know, the fact what's going on here is that the classic full-sized SUVs and MUVs.
And you also have the Scorpio SUV.
The classic Scorpio is getting an electric makeover.
The thing is, these car makers now, it seems, have confidence in the infrastructure of electric vehicles that's going to happen, because up to now, electric vehicles that were happening were within city. These are off-roaders. These cars have to be outside city limits. So these car makers have confidence in the infrastructure that is about to happen in this country with respect to electric cars and electric mobility.
And the infrastructure, I think that's an interesting point you brought into the conversation. Many of these companies, including Mahindra and Tata, is also looking to build that infrastructure. Because so far what's kept us away from our EV dreams or realizing our EV dreams is the fact that there is not enough electric mobility, there is not enough infrastructure, charging stations. All of that perhaps is being taken care not just by the government but also by private players.
And there are cross linkages. Tata Power has tied up with Hyundai. Hyundai has the retail outlets. Tata Power is the power supplier. So these cross linkages are happening to develop these infrastructures. Tata is a big company. They have fingers in almost everything over here. So they have power. So they can use that to put it into electric infrastructure.
And their Tata Nexon EV is the largest selling EV in the country. In recent times, it's a mini SUV. It's fascinating that you have private players pitching in to improve electric vehicle infrastructure in the country.
All right, and talking about electric vehicle, another company that is in the news of late is Ola. Its brand new scooter, which is going to be the latest entrant into low-cost scooter and EV two-wheeler that will be priced at about 80,000 rupees. I think, fame or no fame, two-wheeler EV makers are also going big. They may not be cash incentive upfront for consumers, but consumers are now picking on EVs no matter the price point. They are now more confident than they were at the moment. Let's quickly take a look at the graphics playing up on our screens. S1X will be launched at introductory price of 79,000 rupees, approximately 80,000 rupees for the first week, and thereafter 90,000 rupees. So introductory price 10,000 rupee discount there. 3 variants with varying battery sizes and features. A flagship e-motorcycle, Diamond Head, to be launched very, very soon. Ola's plans, and this is interesting. Ola, an Indian company, making in India, going big, not just launching a portfolio of scooters, but also the bike. Diamond Head, I think that's what it's called.
Well, as if you're going to have full-sized SUVs, this electric version come out. If Thar can have an electric version, it's about time we have electric bikes. Same upgrade in the two-wheeler space, so to speak. And look at Ola. Ola began its electric two-wheeler making foray with the world's largest electric two-wheeler making plant in India, in southern India, in Tamil Nadu, in a district called Krishnagiri, which is very close to Karnataka, which is on the border with Karnataka. It is the world's largest electric two-wheeler making plant, run completely by women. So they had a great messaging to give out in Ola when they launched that entire factory. Yes, they had issues, once that first set of scooters came out, a lot of recalls had to happen, but then which automaker doesn't do recalls? EVs are no exceptions to that rule. So the good thing is that they seem to have dealt with all those problems and they're really taking the electric two-wheeler game to the next level, really.
All right. Ola there, of course, going big on two-wheeler EVs, not just their traditional scooters anymore. There's going to be a bike very, very soon. So EV, a two-wheeler motorcycle, electric motorcycle, is up for grabs as well. But shifting focus to a story that we brought to fore on Monday, that is the bumper box office collection of the 3 major movies, Gadar 2, Jailer, OMG 2. I couldn't still get a ticket for it. I have to say, I've tried very hard. No ticket available.
Is OMG in the same league?
It is in the same
league. Let me demystify this.
Okay.
What has essentially happened, ladies and gentlemen, is the weekend of August 11th to 13th. Those 3 days, in movie halls in India, collections touched nearly 400 crore rupees only for that weekend. The Theatre Owners Association of India, the Multiplex Owners Association of India, have put out an official statement to this effect. These are not figures.
One of the best weekends, perhaps, in a very long time.
The best weekend in a decade. This kind of collections weren't seen seen 10 years ago. This is a decadal high for the box office. The 11 to 13, nearly 400 crore rupees, more than 2 crore people visited movie halls. These kind of numbers are incredible. What happened was that Rajinikanth's movie interestingly released on a Thursday. So in that 400 crore rupees, Rajinikanth's Jailer alone made close to 200 crore rupees in India. Then you had Gadar making a close to 100 odd crore rupees in that weekend, and then you had OMG2 making around 50 odd crore rupees. That sort of gave you that 400 crore rupee figure. Gadar and OMG2 interestingly are doing very well in cinema halls in India, so it's a great time, great booming box office time for these movies. But whereas Rajinikanth's Jailer is concerned, that's a separate story altogether, because that movie makes 200 odd crore rupees in India and makes nearly another 200 crore rupees outside of India. So you're talking about 400 crore rupees for Rajinikanth's Jailer as of date. So Jailer is.
What does it tell you? There are as many Tamil-speaking people in India as there are outside India, perhaps.
The funny thing is that Jailer, a lot of South Indian films do very well outside of the country. It is not a new phenomenon. It is not the first time.
Absolutely.
Because Rajinikanth has made more money than this in abroad films. So films released abroad. So that's really the situation here is that you're asking about why you didn't get tickets on Tuesday. On Independence Day, Indians spent nearly 150 crore rupees in movie tickets, and that includes around 40 crore rupees for Jailer, more than 50 crore rupees for Gadar. When I say 50 crore rupees, it's only on Independence Day. Gadar made 50 crore rupees plus on Independence Day ticket sales. Rajinikanth's movie, which has been a week into release, 6 days into release, still managed to make about 40 crore rupees on Independence Day. OMG2's collections improved obviously because great word of mouth for OMG2. So all in all, fantastic numbers, but really telling you the tectonic shift in Indian filmmaking and Indian movie releases. You cannot see Bollywood as the sun center of the world anymore. Because because you always talk about Bollywood and South is competing with Bollywood. No, let's just forget that. Indian film. In Indian movie theaters, the highest collecting film for the last weekend, for the last 4 or 5 days, is the Tamil film, when you aggregate all of that. Followed by Gadar 2, followed by OMG. All of them auguring well as far as Indians' own interest in watching movies at the theaters are concerned. And of course, we keep talking about, look at those scenes continue, and bear in mind that doesn't have to be Tamil Nadu. That could easily be New Jersey. That could easily be some other place outside. So there's the celebrations for Indian movies outside of the countries, just like the celebration whenever our Prime Minister goes to these countries. They are great brand ambassadors for India and India's culture and India's own ability to take its culture to the next level. Great filmmaking, great quality filmmaking that keeps domestic audiences interested, that takes it to the NRIs and makes the NRIs proud as well. So all in all, bumper box office weekend converted into a historic box office weekend. If anybody had any doubts about going to the movie theaters, that is over and done with. If you are not going to the theater, you're missing out on all the action.
And you may not even get a ticket if you haven't pre-booked on many of these movies. I'm not sure if Amit has had a chance to watch any of them, but
just adding to outside collections, Tamil is a national language in Singapore.
Absolutely.
So lots of
the biggest collection from abroad doesn't come from Singapore, but comes from US. Because US has enough and more NRIs of all languages. So Tamil films, Telugu films and Hindi films do excellent business in the US and the UK. And when we say international collections, a big chunk of it comes from the US and UK.
All right, big chunk of it coming from abroad. All of that, of course, augurs very well for the theatre business. Players, operators in the country who've been so far reeling under heavy, huge losses, not a single hit or release. They've been minor fillers here and there, but nothing like the 3 movies that came out during the weekend. In fact, Jailer came out a week ago.
1 day earlier.
One day earlier on Thursday. Yes. I remember Krishna telling us all those data points on Monday, and these movies continue to rake up more and more revenues and profits.
Jailer already is the second highest collecting Indian film for the year after Pathaan. Pathaan made 1,050 crore rupees. It is the biggest hit in the box office in India for the year. Number 2 was Adi Purush, interestingly, which made 390 crore rupees. And now Jailer with 400 crore rupees is already beating Adi Purush. Adi Purush could be making more than 500 crore rupees.
Absolutely. We'll of course have to wait and watch out. But fortunately, we've run out of time on this bulletin, gentlemen. Thanks very much for joining this morning. And with that, it's a wrap here. Thanks for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ।
When Imran Khan came initially into politics, he thought his personal